Hello again traders, Andrew Curry here, and if you go to my website you can sign up to my free trading newsletter. Now, I was looking at a trading forum recently where traders were discussing moving average strategies, which essentially I've drawn a moving average on here. This is the 50 EMA, but there's lots of strategies out there involving the EMA, and essentially the strategy holds that in this case we have a bearish trend, and as you can see, when we have a retracement back to the EMA point, we see a bearish movement, which of course we can trade. Hits the EMA, bearish movement, hits the EMA, bearish movement. You can see it go back, hit the EMA, bearish movement, and so on. This seems like a winning strategy. There are, and the trouble is traders hear this, they try it, they've managed to get lucky in that they get in a run of where it just seems to work every time. Moving average, trade, move, make a lot of money, and they probably increase their position size as they go because they think, well, why wouldn't I? It's clearly a winning strategy. I'm free money here, money printing machine, and that's great until the trend reverses, and then it doesn't work anymore, as you can see further on this chart. So of course the solution to this is to backtest, as always. Backtest and see if you had continuously taken these trades over a period of time, would you have been profitable overall? One of the things you can look at in your backtesting is, rather than simply say, if I take every one, what if I take where it hits the EMA and multiple signals come together? So a good example would be, if we look at this one on the right here, I'll just clear that arrow. Just clear that arrow off so we know, right, so we know which one we're talking about. Okay, so look, that is the point at which it hits the EMA. Okay, so we scroll back. So we scroll back and have a look, and oh, there we go. Look, if we just look at our arrows, when it recently hit, you can see there, look, evidence that this has been a point of previous reversal, a structure point of previous support or resistance. So we can see here multiple indicators of where it just passes the line there. Oh, there's another one, look. Hits roughly this area, we see a reversal, right? And so on and so on. So there we go, if I find it again. So what happens if you look at your backtesting results, if you took every one where it hit the 50 EMA and it had proven to be a previous structure point? Okay, so take this off to save it getting cluttered. What if we looked and said, okay, what if I only take the ones where the RSI was, in this case, overbought? Now, as you can see, it's not overbought here. It's nowhere near overbought. It's 55.32, more or less in the middle. But what if we mark that on the chart, right, little orange box, and we drop a time frame, and you can see why I mark it with the chart. There we go. Oh, right, there's our point. And if we look here, there we go. Look, evidence of overbought on a lower time frame. So what if we took the ones where it hits the 50 EMA on the daily? I'll return to that there. Open this out. We have evidence of it being a previous point of reversal, and we take only the ones where it was overbought on the 4 hour. There are many things you can look at, but what if you look at where multiple signals come together in your backtesting and only take those higher quality trades with multiple signals? You may find that is the difference between a losing strategy and a profitable strategy. Have a look in your backtesting.